Don't pay $1,500 for Market Cipher A and Market Cipher B. You have the exact indicators for free on TradingView platform. Market Cipher A and Market Cipher B are very powerful tool that in recent years they became popular among traders. In this video, we're gonna explore Market Cipher A and Market Cipher B and see how we can use them for trading. Just make sure you watch this video until the end and let's get started. Before I add the indicators, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. Alright, to add the indicators to our chart, here we click on indicators and we search Wu Manchu. First we add this one, Wu Manchu Cipher B plus divergences, which is written by Wu Manchu, and then we add this one, Wu Manchu Cipher A, which is written by the same author, Wu Manchu. Alright, these are the indicators and as you can see they are added to the chart. This is Market Cipher A, which is overlaid on the price chart, and this is Market Cipher B, which is added here below the chart. Alright, let's begin with Market Cipher B. As you can see, it has different components and together they can help us to effectively analyze the chart. This blue histogram, this light blue and dark blue are wave trend indicator. The light blue is wave 1 and dark blue is wave 2. The indicator gives buy-sell signals based on their crossovers and they are shown by the help of these small green and red circles that you see on the chart. When the shorter wave crosses above the longer wave, it's a bullish signal showing increased upside momentum and it is shown by the help of a green dot, and when the shorter wave crosses below the longer wave, it's a bearish signal showing increased downside momentum and it is shown by the help of a red dot. This indicator also shows divergences based on wave trend indicator, as you can see. So if you use divergence signals, for example, for a reversal trading strategy, this indicator can also help you on this by showing divergence between wave trend indicator and the price. Alright, then we have this white histogram, which is VWAP, volume weighted average price, which is transformed into an oscillator in this indicator. As you know, VWAP is one of the most popular indicator for scalping and day trading strategies, and here we have it in the form of an oscillator. When it is above the center line, it shows that the price is above the daily average, so there is more buying pressure, and in times that it is below the center line, it tells us that the price is below the daily average price, so there is more selling pressure. And then we have this histogram, this green and red histogram. When it is above the center line, it is green, and in times that it is below the center line, it is red. And this is MFI, Money Flow Index, a momentum oscillator which also considers volume, so the buying or selling pressure is measured also by considering money flow in the market. This histogram is less sensitive to short-term momentum changes in the market, so it is a good choice for identifying longer-term trend of the market. When it is above the center line, the histogram is green and we can say that the market is trending up, and when it is below the center line, the color is red and we can say that the market is trending down. The histogram is also reflected here in the form of this green and red line, so you can easier analyze trends in the market. You can turn off this histogram in the settings of the indicator, so here the indicator will be less cluttered and you can only use this line for money flow index and analyzing trends in the market. Alright, we have also this line here which changes color between purple, red and green, and this is RSI, Relative Strength Index, and we have this line here, this blue line, and it is stochastic oscillator. This is K% line of stochastic oscillator, and there is also the D% line here which is not very visible, but you can change the color and opacity in the settings. This white line here is overbought level for RSI and stochastic, and this white line here is the oversold level. For RSI and stochastic oscillator, the indicator also shows divergences, which by default is off, and in case if you need also divergence signals from RSI and stochastic, you can turn it on in the settings of the indicator. Here in the settings, you have complete access to all the settings related to the indicators and you can adjust them based on your preferences. Whatever you need, you can keep them on your chart, and whatever you don't need, you can easily remove them from your chart. Alright, now let's see what we have here in Market Cipher A. As you can see, we have a ribbon here, which is a collection of exponential moving averages from 5 to 34. When the ribbon is white and blue, like here in this part, it tells us that the price is in an uptrend. And when the ribbon is gray, like here in this part, it tells us that the price is in a downtrend. When the ribbon turns from gray to blue, like here in this part, we get a green dot like this. And this is a bullish signal and showing starting of an uptrend. When we are in an uptrend, these yellow diamonds show bullish continuation of the price. The red diamonds show increase of downside momentum, and red crosses, like here in this part, they show even a stronger downside momentum. And in times that we have a big red diamond like this one, this is the strongest signal for downside momentum. And when there is blue triangles like this, it's a signal for probability of reversal. They usually happen when the price is flat. Of course, these signals should not be used alone for taking trading decisions, and there should be more confirmation regarding the reversal of the market. These are just signals for very short-term momentum changes that are happening in the market, and they can help you to fine-tune your trade entry when you have buy-sell signals based on your trading strategy. The opposite of everything that I just explained is true for the times that the market is in a downtrend. When the ribbon turns from blue to gray, like here in this part, we have this signal, this red dot, which is a signal for starting of a downtrend. When the market is trending down, the red diamonds are favorable, showing downside momentum in the direction of the trend, and yellow diamonds are actually counter trend movement. These signals are generated based on wave trend crossover signals, overbought and oversold signals, and also based on RSI and MFI when they cross the center line or reach the overbought and oversold conditions. So here we have a ribbon, which is a collection of moving averages, and it will help us with trend identification. And we have these signals which are based on wave trend, RSI and MFI, and they will help us with very short-term momentum changes that are happening in the market. When these two indicators are used together, they can effectively help you in your trading decisions. For example, here, when the ribbon turned from gray to blue and we got a buy signal in the form of this green dot, when we check market cipher B, we can see that MFI is already green, telling us that the market is in an uptrend. If you remember, I explained that this line helps you with longer term trend of the market. And here we can see that wave trend is above the center line and wave 1 is already above wave 2, and this shows upside momentum and buying pressure. And VWAP is also above the center line, telling us that the price is trading above the average daily price, which again shows buying interest in the market. So you can see that we have several signals confirming that we have greater upside momentum here, and so advancing of the price is expected to happen. Inside the trend, again, you can use these signals to enter a trade in the pullbacks. Here you can see that the price went for a pullback and we had a red cross here, and then we see that the price is moving up, and here in market cipher B, you can see that we have a bullish signal from wave trend and MFI is green, so we could enter a long position at this point and possibly closing our position here when we got red diamond. As I explained earlier, these signals in market cipher A help you with very short-term momentum changes in the market that can help you to fine-tune your trade entry or exit. My recommendation is to use this setup for trend following strategies, meaning you use this ribbon alongside with MFI here for trend identification, and then by the help of other signals you try to find trading opportunities in the pullbacks. When the market is trending up, you look for long position opportunities, and when the market is trending down, you look for short position opportunities. But please pay attention that you still need another indicator like ADX or Andean oscillator that can help you with non-trending market in times that the price is moving flat, so you can filter the false signals that happen during the times like this. And please pay attention that no indicator or trading strategy will give you 100% win rate. This is not possible, and losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.